Okay, everybody, we're about to begin with my set of slides here, so we can start with the right set of slides. It would be good if you could hi in the comment box. It would be great if you could say hello or yes just to confirm that you hear my voice and you see my screen, so that way we can begin. Depending if you are connected with YouTube or Facebook or Eyes On, the way you would type your messages is different. So if you're using Eyes On, normally you would need to not to be in full screen mode. So then you would have the message box, and then you type your message, and then you would go back to full screen mode. That would be the way to do it. Okay, so whenever you have a second, please say hi, say yes, just so I know that you are with me and we are connected. Thank you so much, guys. So here we go. So let's begin with the day. Today is January 10, 2019. My name is Jose Blasco. I will be your guide. Today is an AutoUFOs get-together session for longer term. Notice that we are not calling this session long-term. We are calling it longer term, meaning that what we're going to do today, it's anything above short-term. Okay, so normally short-term trading is easily understood by everybody, is short-term. What we're going to do today is anything above that. So trades that could last a bunch of hours, a bunch of days, a bunch of weeks, or a bunch of months. Any of these and beyond, this is going to be the subject for today. And we'll probably start the day with looking at some options plays for us to take advantage of. Okay, but before we start, as always, quick reminder, we have a disclaimer. So here we go. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication of or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So let's continue with a little bit of getting organized, okay? Very quick, as we always do. Let's take a look at key websites that some of you, I'm sure you are aware of them, but for the new users joining us, it's important that you know where your tools and your support. So the first website I would like to point at is tradewithufos.com. Okay, this is obviously, as the name suggests, this is our main website, and that's probably the most important website, even though this may sound modest, but probably this is the most important web tool, because you're gonna find everything you need in there to use the tool and to support yourself on using the tool. For example, the guide. Okay, so I always point at the guide. It is obviously critical. It is obviously very relevant that when you are about to use a tool, whatever tool that is, you know how the tool works. So we have a guide section with a couple of manuals for TradeStation 9.5 and also TradeStation 10. But also those manuals, okay, that you may love reading manuals. Well, if you don't like reading manuals, okay, here are the two boxes. You can download TradeStation 9.5, TradeStation 10. If you don't like reading manuals, we have also created a collection of videos which kind of emulate the manual, but now you are being explained what the manual says, and therefore is a little more entertaining. It's less in the boring side, if you wish, if you don't appreciate manuals. But it's very important for you to expose yourself to this information, because obviously this information is critical. Okay, for example, calibrating is very important, components and settings, etc., etc. So please take a look at the guide section. Make sure you become familiar with it, so you understand the tool. Get together, the button on the left, get together. This is a very important button. That's how we got together today, isn't it? You guys at some point clicked on the get together button, ended up with this beautiful calendar of the sessions that we have in front of us. We have the whole calendar for January, and probably you scroll down and then you type your information and you register to join the online sessions. Okay, that's what you did. Obviously, this is an important section of the website in the sense that thanks to this section, you will know the sessions that are coming and you can get ready for it. Notice we have different session types: longer term, short term, and also sharpening. Basically, there are 3 types of sessions. Sharpening is when we get to, spend time when the markets are closed over the weekend to prepare ourselves to a deeper level. So it's sharpening. And longer term or short term, I think it's self-explanatory. Today, as you know, we are doing a longer term session, January 10. Okay. What else? Our Facebook page, super, super, super important that you connect with our Facebook page. Beyond, the beauty of social media, which, like everything in life, got pros and cons. The beauty of our Facebook page is that this is a very useful way, very convenient way for us to be connected, basically real time. So, for example, yesterday we did the get-together session on short term, and next thing you know, immediately we posted the recorded session on YouTube in case you missed it. Anything related to what we do to support you as a user of our app, we'll be sharing it here real time. So it's important that you like our page. That way you receive those notifications. Also, let me click not now here. Also, we have a collection. Let me click posts. We have a collection of trade examples that come back to us and tell us that those trade examples have been very useful to some of our users, because those trade examples that are posted from some of our users represent trade ideas or trade scenarios or trading plans that may open the mind to some of you that may be still either learning how to trade or putting your plan together. If you are much more experienced in the market, in the markets, maybe you already have your plan and you don't need this. But if you are not at that level, well, this section could be quite convenient for you, our Facebook page. We also, in case you don't like Facebook, sometimes we add users Facebook, which for personal use actually could be a smart thing to do. But for business use, really, social media is extremely useful. So it's either you use Facebook for professional purposes, or you can also use LinkedIn. So we have a LinkedIn page, and basically the same information that is shared on Facebook is also on LinkedIn. So both our LinkedIn page and also the Facebook page. That way we are 100% properly connected. One more, and we jump into TradeStation. The TradeStation Trading App Store page. Okay, let me copy the link here on your page. So the trading app store, the TradeStation Trading App Store, it's the page where you connect to be able to add the AutoUFOs app to your TradeStation platform. How do you do that? Well, you just come into this white box, and you could either type AutoUFOs or simply UFOs, and then you click on the search button, okay? And the moment you click search, it will bring you a page with the result of the search, where here is the AutoUFOs app. And from there, what do you do? Simple. Click on free trial if you want to test the app on your TradeStation platform, or click on subscribe, and now you have access to the longer term use of the app. The beauty of the App Store with TradeStation is that the whole installation, delivery of the app in your TradeStation desktop, it's automatic. You don't need to install anything manually. The App Store, just like when you install an app on your phone, the App Store will take care of delivering the app to your TradeStation platform, and it gets automatically installed. You have nothing to do. It's very, very convenient. Okay. Anyway, so we just got organized here with a little bit of reminders and, housekeeping matters, if you wish. So it's time now to trade. Okay, and today is a longer term session day, so we're gonna be taking care of that. Okay, very, very quick before I begin with the longer term session, I would like to bring a question that one of our users have sent us, and I would like to take care of this question before we begin with the session, and that way I can give a proper answer. Okay, so this is a question sent from Simone, which I believe Simone is with us here today. Yes, yes, he is. How are you, Simone? Nice to see you. And by the way, this is the perfect way to interact, guys. Okay, when you guys have questions as you start using the app and everything, what you should do is exactly what Simone did. Simone sent us a question, and out of the question he sent, well, sometimes the questions are quite simple and we can just give you a quick answer over an email. But, sometimes it's much, much better to talk about it the way we're going to do today, which is, live during the get-together sessions. Okay, so here's a question from Simone. I'm just zooming in a little bit on his question. He says, hi, can I kindly ask Jose to review the EC futures trade I am attaching at this email? I assess a range within 240-minute UFOs trend with the 60-minute chart, entry zone, 15-minute green zone, inside a 60-minute green zone. Even the moving average exponential was inside the zone. During the trade, the 60-minute green zone turned into red. Am I missing something? Do you have any advice that could help me? Thank you. Okay, so Simone Casella seems that he planned a trade using the UFO. Was looking fine, but then the was executed. The green UFO became red. The trade probably ended up as a losing trade. And the question is, did I do something wrong? Did I do something wrong? Why did that happen? What is it? I think that these type of questions are great, because of course, when we do these sessions together, hopefully we'll be planning many trades that are nicely profitable, and you guys can enjoy the app and enjoy some profits, which is great. But also, we also need to learn the other side, which is what happens when the market goes against me, or why is it that it went against me? Did I miss something? So it's very, very healthy that we talk about all angles of trading. It's not only about if it's okay for me to use a strong word, it's not only about getting together here to brag about the app, okay, because the app is cool and we all love it, but it's not about that. It's about actually growing as a trader. That's important, I would say, right? So that's a very, very good question. Okay, so feel free, guys, to send questions like this, because this is the way to do it. Okay, so now here on the left you can see that in the 15-minute time frame of the euro contract, there were a collection of green UFOs, and Simone was planning to take this trade. I believe that Simone wrapped around those two green UFOs a couple of lines at 116.19, 116.11, which are the two lines that you can see here on the right. Okay, basically on the left you have the before, and on the right you got the after. And basically what happened afterwards is that the market came, had an initial reaction to these UFOs, bounced a little bit, but finally ended up as a stop out. Okay. So to be able to do a little better assessment, so what I would like to do is load the euro contract, okay, and Simone using a non-adjustment. Okay, so instead of simply at EC, I am typing the symbol at EC equal 103XN. This has to do with avoiding the adjustment that continuous contracts would do automatically. We also, let me get back to the time frame. We have the 15-minute time frame, and this was happening 1:10 around, let's call it 7 a.m. Okay, so 1:10 around 7 a.m. Okay, 15-minute time frame. I'm using the 60, so let me switch to 15-minute time frame. And 5 to 7 a.m. Something like that. So we are talking about 116.19, 116.11, 16.19. Okay, so I see what it is. So basically, if I could go back in time, this area here, okay, this area here, let me make this green. Okay, I'll make it light green so we know it's not the same green, but it's green. So this area here, okay, was the UFO that those collection of UFOs that were identified on the left, okay, and then it basically went through and ended up with a stop out. So initial bounce and then stop out. Okay, so now you know that what's interesting. What would be interesting here is to look at the context of other time frames here. So I'm going to look at the 60. I'm going to look at the 240 minutes. Okay, so it's loading, and then I'm going to look at the daily. Okay, yeah, and I could totally see what you were trying to do here, Simone. I could totally see that. You know, Simone was betting on an uptrend that was likely to continue because there was no red UFO anywhere close in the daily time frame. The red UFO was far away in the 200-minute time frame, in the 240-minute time frame. The next red UFO, okay, it's loading. My internet is just a little slow here. One sec. Oh, this is weird. It's taking a long time here. Let me check my download scheduler to see if I got something waiting in the schedule. Yeah, let me cancel this contract here. And let me do that again. Okay, so that is the daily 240 minute. Here we go. So in the 240 minute, the red UFO was far away. In the daily time frame, the red UFO was far away. In the 60-minute time frame, okay, here we go. Now the red UFO was far away, okay, because this UFO formed after you got into the trade, okay, and in the 15-minute time frame as well, the red UFO at that time was far away. So actually, what you have done, Simone, I would just simply go ahead and it made sense. The only thing that is unfortunate is that even though there was objective room for this market to continue moving in that particular direction, well, the reality is that, and we can see that in the 60-minute time frame, and you said it perfectly, that the green UFO became red. So basically what's happening is that some new big player, some new bank, some new big institution, who knows who that was, but some big institutional player stepped on board a few hours ago, more or less coinciding with you entering the trade based on a market condition that made sense, but some market participant that was big enough to move the market to the downside got in and just added in the marketplace a major pile of sell on-field orders. Okay, and the UFO shows us those on-field orders, but of course, because we don't have a crystal ball, the red UFO showed up after you have executed the trade. There particular trade you got stopped out, and this is part of trading. And I have to say that this is probably one of the happiest moments, which is when you get stopped out and you have a clear explanation of why, right? Sometimes you may get stopped out and it's just because institutions remove the orders, and therefore you may not know for sure why. But in the very simple to understand, you have been stopped out because a new institution stepped in with a major pile of sell-on-field orders, which you could see are located at 116.21, 116.25. This is where you got in because your entry price was 116.19, right? Where the institutions were selling at 116.21, so basically 2 pips above you. So this is one of those unfortunate times, and therefore, you know, that's what it is. Okay, I don't have much more to that's part of trading. Is that making sense? But in any case, good job by sharing this example with us, because it's important for you as a trader who, I mean, I know a little bit of where you're coming from, Simone. So if you don't mind me, I could share this following comment, which is that in your particular case, even though you have some market experience, you are still in this or bettering yourself, and you are doing very well asking these questions to not only build your skill, but also build a certain level of confidence. because when a person is new to trading, if you were to take a loss and you don't know why, it really not only it hurts your account by a little bit, which that's not a big deal, but really it hurts your confidence, and that is a big deal, because then you may not plan future trades or enough trades for you to keep practicing and develop your skill. Okay, so good job by bringing these questions to the room. And if you have any remaining question after we just gave you the answer, please, Simone, feel free to type on the message box, and I'll take care of that. Okay, thanks a lot. Anyway, so we got a question, and therefore it's now time to get back into what we're doing. So what we're doing is long term, and if you remember from the session that we did last week, and to be honest, I don't remember the date. It was last week. I think it was January 4, exactly. It was January 4. So January 4, we did a longer term session, and basically I remember going over the filtering that I had here. Okay, I had a filtered setup on TradeStation, and I remember going over this for you guys. Okay, so let me. So now, I'm not going to go over this again because it took a lot of time the other day, and you can always go back and watch the recording. But a minute ago, before we started the session, I just clicked on the Run button to run the filter across a bunch of stocks, and I came up with this list of 14 stocks. And what I would like to do is I would like to use those particular 14 symbols to go over those 14 stocks and analyze together with you market opportunities that we may find for longer term trading / investing. And we're going to use options on those stocks in those particular opportunities. And I'm just going to be sharing in a very, very open fashion my thinking process as I go over those particular symbols. We got up to 14. And we end up with either finding a good trade or not finding a good trade. Remember, traders is like we are fishermen. Our job is to get in the middle of the sea, in the middle of the ocean. And if there is fish, take the fish. And if there is no fish, then go back home safe. So I don't know if there is fish or not. Our filtering process is likely bringing fish for us. It's a little bit like a radar, right? So we just applied a radar process to the sea, so we know where the fishes are biting, and we are now going to direct our boat to that area and try to get the fish with a net. Does that make sense? That's the job that we're going to do, and I'm just going to be sharing my thinking process with you as I analyze those particular market opportunities. Okay. A quick reminder of what the filtering process has done. I will not look at the particular parameters to not to waste our time, if you wish, because you can always go back to review January 4. But just so we are exactly in the same thinking process as we go over the opportunities, remember what this filtering process was doing. For example, if I click ABBV, which is one of the stock in the list, what this was doing was, number one, looking for stocks which have options where the options for that particular stocks are quite highly priced. Okay, and one way you could see that in TradeStation is using an indicator that comes by default for free, which is called implied volatility stocks. And basically here you have a line, and when the line becomes magenta color, kind of magenta / purple, it means the options are very, very, very overpriced. And when options are very overpriced, well, an options trader would love to sell them, because you sell something that is high price, therefore you collect a lot of premium. When the options become this kind of blue / green color, this is kind of like it's cold. So cold means options are very underpriced, and therefore it would be time to buy them, not to sell them. Okay. So in the case of ABBV, we have a little bit of purple here. Okay. So I mean, it's not as high. Certainly, those options are not underpriced. Those options are not cheap. Okay, and the reason why I'm looking for options with certain level of overpricing is because what I'm gonna do today is I'm looking for opportunities to sell options. And the reason why I'm looking for opportunities to sell options is because, again, I'm repeating myself from the other day, but very quickly, I'm looking for opportunities to select premium now by selling options today, and then I wait until the options expire. So when the options expire, then I keep the premium I collected today. And it's like you sell an insurance policy. It's like you are an insurance company. You sell an insurance policy to a car driver. And as long as the car driver doesn't have an accident, when you reach the insurance policy, then the insurance company would keep the premium and had nothing to do until the expiration date. So that's the idea. I want to kind of mimic or replicate that model, that process. So when selling options, my filtering process got rid of the stocks that had options that were low price. If you look at ABBV, if you look at AXP, which is American Express, is loading here. You can see we got purple too. If you look at Colgate Palmolive, CL, we got purple. If you look at Chipotle Mexican Group, Chipotle Mexican Grill, CMG, is going to be in the purple as well. If you look at IBM, well, I just clicked on the JP Morgan, it's going to be on the purple. If you click on IBM, it's going to be on the purple. So again, long story short, one of the things I've done with the filtering process, okay, it's look for stocks and highlight the stocks, only the ones that have options that have some level of overpricing in them. Okay, that's the first thing I have done. What is the second thing I have done? Well, the second thing I have done is to look at stocks that are not in a strong trending condition. Okay, and for that I use an indicator called DMI. Again, remember indicators. I'm almost tempted to say that those indicators in the bottom part of the screen are borderline with a waste of time. Okay, so don't get me wrong, but let me explain why I said that. Indicators are lagging always, right? So if you use indicators that are mathematical calculations on past data, you will always have a lagging reading. Okay, so you don't want to take timing decisions based on the indicators in the bottom part of the screen. You want to take timing decisions based on whatever you do on the upper part of the screen, not on the lower part of the screen. Is that making sense? But at the same time, just like when you drive a car or when you are at home and you look at things like, for example, the temperature of your home when you adjust the air conditioning, or when you look at the speed of the car when you're driving in the highway, well, those indicators could certainly be useful for filtering purposes when you're looking for stocks in a certain condition. Okay? And then that certain condition will become whatever the UFOs dictate, okay, because the on-field orders is what move price. But at least to have an initial selection of stocks, because there are 9,000 stocks in the US market. So then indicators for that selection process are going to be useful. So the DMI indicator that comes by default with session, and I'm looking at the blue line here, okay, when that line is below 25, which in this case it's it's 21.5. So this indicates stocks that are not trending. Okay, so this market was going down intensively, at some point was going up intensively, but right now it's in a sideways mode. Okay, so DMI identifies that. If you look at Colgate Palmolive, same story, sideways mode. If you look at CMG, Chipotle Mexican Grill, same story. Okay, it was going down very aggressively, up very aggressively. So it's kind of like a wide range. This thing is going sideways. There is not a clear indication of a continuous movement in the market. So basically, that's what I got. Those 14 stocks represent stocks that have a high level of premium built in their options. Options are overpriced, and therefore we will be delighted to sell them. And those stocks are currently moving sideways, right? So that's great, because if you were to sell options and collect premium and the stock was to remain sideways, then those options will expire worthless, and therefore the premium collected today would be kept, and that would be your profit. Okay, and that would be your profit. So now there is everything I said makes a lot of sense, but there is one thing that is missing, which is the fact that the stock is currently moving sideways does not guarantee it will continue moving sideways. What gives us a higher chance that the stock will continue moving sideways is what? How can I know? You guys, please type this answer for me. What will guarantee, or well, guarantee is too strong as a word in trading, isn't it? Because it's all about probabilities. But what will give us an extra edge? What will give us an extra odds of success that will help for the stock to not to only be in sideways mode, but most importantly, to continue trading in sideways mode? You know, how can we assess that? Very good. Very, very good. So you guys are guessing it, isn't it? As I can see, you are typing, is the UFOs, is the on-field orders. If you have only on-field orders to buy, or you have only on-field orders to sell, then the stock that is sideways will stop being sideways and start trending. But if that stock that is trading in sideways mode has on-field orders to buy and sell both, in other words, when you look at the screen, you see the green UFOs, but also the red UFOs. And on top of that, we have a collection of UFOs on top of each other in both cases. Well, now we have a tool that is telling you that not only the stock is trading sideways and the options are quite juicy, quite hefty with the amount of premium built in. On top of that, the stock is likely to remain sideways because of collections of UFOs above and below, and therefore we could certainly go ahead and sell options and wait for time to pass until the expiration date and make money on time passing. And this is a fantastic way on how to do longer-term investing or longer-term trading. Okay, so I'm gonna look for those type of opportunities, and we're gonna plan this together. Very good. So let's go for it. Okay, I'm gonna start BBV. And by the way, the filtering process I got here with 14 stocks is great, but I want to be a little pickier if that's okay. So what I'm going to do as well, apart from loading the charts, I'm going to click on this button here to load OptionStation Pro. And as I load OptionStation Pro, what I'm going to do as well is to also look at the level of liquidity of options. And I don't want to make it too complicated. To check the level of liquidity of options, I could certainly go back and look at open interest and volume and this and that, and certainly that would be very useful. But in this case, I'm still in filtering mode, okay? So in this very efficient filtering mode, what I would like to do, now that I have my option chain here, what I would like to do add the spread, meaning the difference between the bid price and the ask price of the at. I'm just gonna look at 2 strikes, look at a couple of two or 3 expiration dates, 8 days, 36 days, 64. I'm loading 4 expiration dates, as you can see, 4. Number of expirations, 4. And I just want to make sure that the spreads are reasonable, okay? So let's begin with, oh, sorry, I just clicked in the wrong place. Let's begin with ABBV. Actually, I already have ABBV on the screen, so I'm going to have to type it here manually. So here we go. So ABBV. So this is loading as we speak. And if the spreads are a little wide, then I'm going to go for the next stock. And only when I see spreads that are, let's call it reasonable, then I'll start planning trades on that. Okay, so what do we have here? Well, we got like 15 cents of spread. It's not the best stock in the world. I could certainly plan a trade on it, but the level of liquidity is not the best. So I'll keep ABBV in mind. I may come back to ABBV, but let's check American Express first. And by the way, when you develop experience trading options too, out of this list, I would know, for example, their liquidity. So, but I want to do the process manually with you, so you get to see this. Okay, so I'm loading AXP. Okay, here we go, and here we got 15-cent spread. This is not too good in the next expression. So we could certainly plan a trade with American Express, but just like ABBV, I'll look at that next if I the better liquidity. So I'm looking at Colgate-Palmolive, and the reason why this is important too is because if the spread is wide, the beta spread is wide, then you get a penalty entering and exiting the trade, and that penalty works against you, isn't it? So in this case, we got 40-cent spread, 50-cent spread. So I think that we're gonna look at Chicago. I don't know why I always keep calling that stock Chicago. I have the tendency to call it Chicago Mexican Group. I don't know why, which is Chipotle Mexican Grill. But for whatever reason, CMG triggers Chicago Mexican Group in my mind. I don't know why. Anyway, so here we got a much wider spread. Having said that, this stock is also a $500 stock. So in certain situations, it could be reasonable, but I'm going to pass for now. Let's look at IBM. Let's look at IBM. Okay, so loading IBM. Okay, so IBM is loading. So what do we have here? Here we go. So IBM got a 10-cent spread here, a 15-cent spread, and we are talking about a stock which is $120 per share. So, I would say this is much more reasonable to me. Out of all the stocks we have seen up to this moment in time, this is the stock with the lowest spread up to now. JP Morgan probably is even lesser, but this could be subject for a trade. Okay, so I'm gonna stop here, and we're gonna give IBM an opportunity. Okay, and to give IBM an opportunity, I'm gonna drop to the 60-minute time frame because if you think about how options work, really, you probably know this if you trade options. If you don't, listen carefully because it's important. Options have whatever value they have today, but when we get to expiration date, the time value portion of the option will have to be 0. Okay, because the day options expire, there is no time value left. So time value is 0. In other words, there is a time decay effect in the options world. You may have heard this term of time decay, but what's important for you to keep in mind is that the time decay is not constant. The time decay is slower at first and faster next, which means that if I'm gonna sell options, attempting to collect premium and wait for the expiration date and make money on time passing from now until the expiration date, well, I could certainly do that, but I would like to do that with the lowest expiration date as possible. Okay, that's what I would like to do. Why? Because that way I sell the options today, and hopefully next Friday or so, I'm done. Maybe the next Friday is going to be the Friday after, right? But I don't need to wait 3 months because 3 months time, too many things could happen in a stock, especially even at earnings reports. Is that making sense? So I would like to look for short-term expiration dates, and if I use options that are too far out, well, the problem is that I may get paid too little if the expiration date is a short expiration date. So in order to try to find a balance, I'm going to use the 60-minute time frame, not the daily time frame. Okay, in certain places on the chart that give me that particular balance. Okay, and one rule I would like us to use in that particular case, out of common sense, is that remember, we concluded we want to do this type of trade with IBM because IBM is trading sideways, but we also said IBM will remain trading sideways as long as you got UFOs above and below. And I said UFOs with an F1 because, when IBM rallies to this red UFO, well, certainly from there it's likely to fall. But if instead of relying on that red UFO, I was to rely on two or more, well, then now it's going to be even more likely to fall. Why? Because now it's not only one UFO, it's two UFOs bringing power down for that stock not to move higher, right? And so the idea, when you do these kind of trades and you're going to define a range where you expect IBM to stay within, the idea would be to make sure that you have at least two UFOs. One, I would say, is not enough. One could certainly work, but two is certainly better. Okay, so let's take a look at this. Okay, let's say we can conclude in this initial part of the planning that IBM is not going to surpass 127.58 from now until the next expiration date. Let's say we're going to conclude that. Well, the next expiration date is either January 11, which is tomorrow. Okay, and of course, it would be great if I could find options. 129, I need to add a few more strikes. So 129.58, that's 130. Well, notice that for 1 week from now, the 130 pays nothing. Why? Because, well, we are not the only people in the world expecting IBM not to get to 130 in 1 day. Okay, so I'm going to have to look at the next expiration day, which is 8 days from now. And if I look at that one, I kind of got, also very little amount of premium. What if I look at 15 days from now? Well, 15 days from now does give me 39 cents of premium. Okay, so 39 cents of premium may do it. Okay, may do it. Okay, now I'm going to have to stay in the trade for 15 days. Okay, so we are talking about, remember, today is a longer term session day. So it's not a long-term trade, but it's longer term, it's not short term. So we're going to be in the trade for 15 days. So that could do it. Maybe we're going to end up using February 1st is 22 days, and now you get paid 53. Okay, but now what I don't like here is that now the spread is widening. So there is less liquidity on February, 20 cents to 11 cents or 12 cents on January 25. Okay, so I would really like to use January 25. I think that probably is going to be a good balance. Okay, now here's the thing. My bet is that IBM will remain in a range. The upper boundary of the range, I just set it to be from current price to here. In other words, from 120.15 to 129.51. Okay, that's the, we're talking about $9, almost $9.50. Okay, I'm giving myself $9.50 room to the upside. Right? Let me be more precise. $9.36 to be precise. So if I project $9.36 to the downside, is 120.41, as you can see on the right, I will bring my lower boundary to 111. Okay, to 111. Okay, 111, which 111 is somewhere here. Okay, somewhere here. Now, doesn't at 111 because I'm in the middle of the white space. Now, if you were to tell me that you don't expect the stock to get there, I would be much more, much happier. Why? Because even though it's higher, okay, higher than 111, the reality is that if you think about it, I got 1, 2, 3, and 4 green UFOs to defend myself. If this thing goes down, it's likely going to bounce up. If it goes down a little more, it's likely to bounce up. If it goes down a little more, it's likely to bounce up. And in other words, 112.49 makes sense. Now, if you were to look at that 112, the 112 options pay you 88 cents. Okay, so if I sell options below 112, I get paid 88, and if I sell options above 130, I get paid 39. If I do it together at the same time, I'm gonna get paid. I don't know. Let's call it a hundred, close to $120. Okay, close to $120 per contract. If I do 10, that is $1,200. And now, as long as that stock remains range bound between 112 and 130, in 15 days, you would collect your $1,200. Okay, and it's a very passive way to make money on time passing. Okay, and it kind of makes sense. So let's go ahead and plan the trade properly. Okay, and little extra extra confirmation. What I'm going to do as well, just to be a little extra precise, I would like to activate as well. I would like to activate on TradeStation the pre-market and the post-market data. So I'm going to select US stocks with pre and post-market. Just in case there is another UFO close by. Look at that. I have another UFO right there. So I'm going to move this right below. Okay, I would not want to be stopped out at 112, have the market drop to 111.61 and then go back up, and I got stopped out just because I was not aware of this green UFO, because it's a pre-market, post-market UFO. Okay, so I want to take this under consideration. And on the upper side, we're fine. Okay, so I got my 130, and at 130 still got white space. Okay, so it's fine. Good. So let's go back to regular session. Okay, and now I know my upper part of the range is 129.58. The lower part of the range is 111.61. Okay, and that is the range I'm going to be dealing with when planning this trade. Okay, so let's plan the trade, and we will in the future conduct sessions on options trading. So if you are not an options trader, if you don't trade options on a regular basis, this may be a little advanced. But what I'm going to do now is I'm going to build an iron condor. So I'm just going to add it here. Analyze sell iron condor on IBM, and I'm going to add 3 price slices. I'll make it red. That means that's my upper boundary. On the bottom, I'll make it red, which means it's my lower boundary. In the middle, I will select last. So it's the last price, is the current price. And on the top, we said 129.58. Okay. Having a problem here with the fonts. Okay, hopefully this worked. Yes. Oh no, it didn't. So 129. That's pretty interesting. I never seen this before. This is one of those things when you update software on your computer and sometimes it gets crazy, right? So we got the 159. Let's see if we can get the 58. Interesting. Okay. I think I get it. No, I haven't. Okay, I'll make it 60. This should be 60, yeah. So, yeah, one sec. Interesting. Let me remove that one. The one I made it by mistake. Here we go. So, 120.60 is going to be the upper one. I mean, I'm just going to rectify this by 2 cents, and that's it. It's about the same. Okay, 129.60. And then I'll get the option chain back. Okay, and the bottom part, we are gonna make it to be red color, and it's going to be 111.61. So that should be 111. Very good. Let me see. Yes, 111.61. Okay, so we got it. So I got my upper boundary 129.60, the lower boundary 111.61, the current price, which is in the middle, 120.03. Okay, so what am I going to do here on the bottom? I am building an iron condor. In case you are not familiar with iron condors, it means that I'm going to sell 2 puts, I'm going to sell 2 calls. The puts I'm going to sell are going to be the one below. So I'm going to do, we had, yeah, 111. So I'm going to do 111, 110. Okay, so on the put side, I am selling the 111 put and buying the 110. Options trading, it's always kind of backwards. Notice that I'm taking care of the units below, but they are above, right? And now I'm going to take care of the units above, but then they are below here on my table. So don't ask me why, but it's kind of like options platforms have been built from the beginning, and options traders, we got used to it and we feel comfortable with it. If you are new to this, it's a little confusing, but you'll get used to it as well. Okay? So what do we have? Well, if I sell the 130 and the 111, okay, let me write it on here. So it's going to be more visual for you. I'm going to be buying and selling an option above, and then I'm going to be selling and buying an option below. Okay, so the one I'm selling is the 111 call, and the one I'm buying is the 110 call. And above, I am selling the 130 and buying the 131. That's what I'm doing. Make it purple. And by the way, I did it backwards. Calls is above, puts is below. So this above is call, C for call, and below is going to be puts. So P for put. Here we go. Now I got it right. Okay, so that's my original plan. Above 129, below 111, sell and buy, calls and puts. Okay, that's what is known as an iron condor. Terminology is always, a little intimidating, so don't be intimidated, please. It's much simpler at first. It sounds very like very very strong terminology. Okay, so it's again simpler than what it looks like. Okay, so anyway, so I'm gonna put this trading out there. So let's take a look at a few more details related to this trade. Right now, if I was to do this trade, it seems that if I was to go in between the bid and the ask, my iron condor would pay me $22. And also notice that if I was to reach the upper part, I will lose $41. And if I was to reach the bottom part, I will lose $35. In other words, it seems that the upper part of this trade is a little more painful than the lower part of this trade. Okay, so I want to look at the options prices here. I'm going to go back to look at the options prices. Would like to load a few more strikes. So liquidity is good. Liquidity is okay. So what about this? Instead of 131, I want to push this to 130. Sorry, I'm going to push the 110 to 109. That is now giving me a little more pain below, a little less pain above. What if I push this to 132, 63 and 50? Yeah, I think that could be okay. That could be okay. If I do 130, 132, 111, 109. Yes, because it's always nice to have a little less risk below and a little more risk above, because on how options are priced, normally the puts will inflate if the market drops. The puts will gain value. If the market drops, it will get overpriced, taking in the option. So that means that, in the lower part, you may get a little extra loss compared to 49. So it's always a good beginning to have a little less loss below, a little more loss above, because if something was to happen and that market was to really fall hard, normally the bottom part would create a little more harm than what we see now. Okay, so I would say this makes sense. Okay, so by doing this trade, we may get anywhere between 40 to 50. Maybe we're gonna try to get 50 cents times 100 is $50 per iron condor. And the beauty of doing this iron condor is that you have two choices on how to execute it. You can execute it using stop orders, or you can use it without stops. Because the two options that we bought, the 109 put and the 132 call, those are acting as your stops. Notice that if the market goes up, no matter how high it goes, the most you will lose in this trade, you can see it on the left next to the blue color, it's $172. Even if you never use stops, even if you forgot to use stops, even if you chose to not to use stops, the most you will lose cannot exceed $172. So it's like the iron condor got a stop built in. Of course, you can also use a stop on top of the iron condor, and this could actually be recommended. But today is the first time that I'm going to execute an iron condor, so I'm just going to do it and not to plan to use stops. And later in time, when we go over sharpening sessions to understand better options and so on, we'll discuss many more possibilities, and you guys will develop many more ways on how to be able to execute that. Okay. Now, what's nice about this trade? Okay, so let me do a little math for you, and then I'll place the order, and then we'll conclude our session today, and we'll leave this trade running with IBM. What's nice about this trade is that the most you can lose is 172, and this also happens to be the margin required by the broker for you to sell an iron condor. So if you do this times one contract, the broker will tie up $170. If you do that times 10 contracts, the broker will tie up 10 times more, which is $1,720. So that's the margin required for the trade. What's nice is that in this trade, if we're right, let's say we're going to the midpoint, 41 cents times 100, that's $41. So you're going to make $41 by using $172 of your money. This is a 23% return, almost 24. Now it's a 23% return on whatever amount of money you commit to this trade in 15 days. Okay, in 15 days. If you annualize it, if you were to think like an investor and you analyze it, you multiply this times 365 divided by 15. Okay, and this is actually a 580% return. Okay, if you spend the whole year doing this kind of trade every 15 days, that would be 580% return. So that's pretty cool. Okay, it's a powerful thing. Now, of course, you need to know the size, how many condors you do. In this case, I'm doing one contract. Should you do one? Should you do 5? Should you do 10? That would depend on your risk management. We will discuss all of this today. We have no time. The session needs to conclude, and today is a trading day. It's not a sharpening day, but we will talk about all those things. Okay, guys. So we can also support you on how to use AutoUFOs better and of course manage your risk. So what I'm just gonna do here is I'm just gonna go ahead and execute that one. Just gonna click trade. Okay, trade, and I'm just gonna put this trade at market price. I want to place order. Yes. Okay, here we go. And now here in the bottom, it says filled. Okay, so I have got filled. We just have an iron condor in place in this account. The trade is in, and now we just need to allow for time to. Okay, and it's either we are right and we'll make a profit, or we are wrong and then we'll take a loss. And again, for the loss, you can choose to use stops, or you can choose to don't do anything because the Iron Condor got protection built in. Okay, so we will need a decent amount of time to discuss risk management with Iron Condors in a much more efficient way. Okay, but for now, what do we know? We have an Iron Condor in place. Okay, guys. How was today? Any question? Any more comment? You guys have been quiet today, to be honest, which I understand today is a longer term day. I also know that not everybody today is trading options. So today's session is maybe taking you a little bit outside your comfort zone, and that's why you are a little less participative than normal, which I get that, I understand that. But still, before we conclude the session, I would like you to share with me how did it go. You have any remaining question for me to address before we go? It would be good that you share with me, okay, guys? And please understand that when we do get together sessions for short-term or long-term, the priority is to execute trades, and that's what I just did, and that's what we did yesterday. And the idea is to, to put action in place. Okay, I'll give you as much detail as I can. Sometimes I will actually talk a little too fast, because I want to make the session very rich. So I'll give you as much information as I can as I'm planning the trades. But really, the times where we will plan, we will explain things with more detail is when we will do the get together sessions for sharpening, where the next one will be January 27. Okay, and also more to come. Okay. Good. So yeah, so I can see your comments here. Basically, your comments is just to show that everybody's happy, which makes me very happy too. So I would say we are done for today, my friends. It's been a pleasure to join you. I will see you next week. Again, next week we are seeing each other on January 15. That will be next Tuesday. It will be short-term trading. We'll be focusing on the futures and the Forex. We'll be looking at the lower time frames, and we'll catch as many trades as we can. Okay, guys, thank you for joining us today. Take care, be safe, follow the plan, follow the rules, and send us many questions if you have any. Take care, my friends. Bye-bye.